Assigning overhead costs to jobs it can be pretty tricky, so you're going to have to read through this maybe a couple times until you really get it. Maybe look at this chapter animation too to have somebody else explain it to you in addition to me. But basically, think about a T account for overhead costs. We have been accumulating overhead costs, actual overhead costs, in our overhead account by debiting overhead for things like utilities in the factory, depreciation, property taxes, all this factory-related costs that are actual costs. Now we've got a big chunk of costs that we have to get covered by, through charging our customers. So we have to find a way to allocate some of that cost to our jobs. Okay, so that when we add that cost with the materials and the labor that are directly allocated to that job, we can then cover all of our costs associated with our jobs plus our overhead through our sales price that we determined for our customers. So that's what we need to do, is come up with a way to allocate overhead to jobs. So what we do is we calculate this thing called a predetermined overhead rate. At the beginning of the year, a company will estimate its total annual overhead costs, and then it will divide it by some appropriate expected level of operating activity for the year. So let's say direct labor hours, for instance. Say a company expects to have $1 million of overhead costs for a year, and they expect to have 100,000 direct labor hours for the year. Well, if you divide those expected overhead costs by the direct labor hours that are expected to occur, you get $10 per direct labor hour. So that is an overhead amount that we're going to assign to jobs based on every actual direct labor hour that gets worked on a job. So then we start going through the year. If job 1 requires 40 hours of direct labor, then we'll put $400 of overhead, 40 times $10 per hour, put $400 of overhead into that job as an additional cost. So then when we add the labor and the materials to that 400 of overhead, we'll mark up our job so we'll get enough money from our customers to cover all of those costs, including some for overhead. Now, I hope that makes some sense. Now, I need you to really think that through and read what this study objective is talking about to really get overhead. It's kind of the most, esoteric subject in this chapter. So after we figure out our overhead rate and we decide how much we're going to allocate to a particular job, we're going to debit WIP inventory just like we did for materials and labor. We're adding cost to WIP, and we credit overhead. Okay, so we're moving some of those actual costs into jobs. Although they're not moving actual costs into jobs, we're estimating and applying some costs into jobs. And we'll talk about what happens at the end of the year when obviously you're not going to have gotten all of your actual costs, overhead costs, put into jobs. You're going to have to do something to kind of clean up the end of the year mess. So then, just to finish out this picture look of what your job cost sheets and the work in process inventory account will look like, you'll have more costs going into WIP. This is the overhead cost, and then we've got applied overhead going into each job as well. We have 3 job cost sheets here, and we've got overhead going into each job. We'll talk about assigning cost of finished goods on the next video.